This is not personal services income because it's being generated from a quote business structure. So this is so even if all of the income of the business structure is being generated from the personal efforts and skills of a number of individuals. That's what confuses people.
Like an accounting firm.
Like an accounting firm. That's
Mhm.
exactly right. So the decision as to whether a business structure exists or not can be difficult when a business operation sits on the border between there being a business structure and there being a business where the income is considered to be derived only from the personal exertion of the individuals.
Mm.
So the tax office says this: where income is derived by an entity which has substantial income producing assets or a number of employees or both, the income is more likely to be generated by the profit yielding structure of the business rather than the rendering of personal services. Okay, we get that idea, but what does substantial income producing assets or a number of employees mean? How many are we talking about? How many pieces of equipment, what value, all of those sorts of things. And so this is where the confusion comes in. So the term business structure is not defined in the PSI law. In fact, it's not even used in the PSI law. Now, here's an example of Jim, and he works for an accounting firm. It's quite a large accounting firm. And so none of the firm's ordinary income or statutory income is Jim's personal income because it's produced mainly by the firm's business structure. Now, that's notwithstanding, we've got all of these human being accountants beavering away doing things
Mm.
and all exerting themselves personally. That's irrelevant. Put them all together and it's not personal exertion income, it's income from a business structure. So the question though remains is, where do we draw the line? When does it become one? And this is the big question. So this particular example is not all that helpful because we can look at that and say, oh yeah, that's clearly a business structure. But what happens if it gets smaller? So I'll just mention these factors here. So the tax office says, well, if you're going to think about this question, think about these things: the number of arm's length employees or others engaged to the entity to perform work and their relative contribution to the income earning activities, the existence of goodwill, the extent to which income producing assets of the business are used to derive the income, the nature of the activities carried out, the size of the operation, and the extent to which the income is dependent upon a particular individual's skills, efforts, or expertise.